that's theoretically when the Fed maybe will start to cut rates if you're looking at the bond market, but that's not necessarily good news.
Certainly not here. You put it all together here, you have a mixed bag for the markets here on the day. We'll start off with the Dow Jones Industrial Average, because that was actually the big lagger. It's going to finish lower by about 1% on the day. Obviously, a big part of the drag coming from Goldman Sachs, which is down more than 6% here on the day. But more than that, something like 24 stocks in that 30-member index were lower on the day.
Mexico, those tariffs on tortillas.
It could not hold that 4,000 level. It looks like it's going to close right around 3,991. We should point out that that 200-day moving average has been held. The 200-day sitting at 39.78, so we still remain about 12
Coming
points
up
above
next,
that. The
Tesla
going to finish the day
and United.
in the green, up by about 0.1%, and the Russell 2000 in the opposite direction, lower by about 0.1% on the day.
Yeah, that 200-day on the S&P continuing to tease us, right? We'll see where we go from here. Having said that, if I look at the S&P 500, most names in the average lower today, 308 to be exact. Katie, we got 190 gaining some ground, and I know you're going to dig a little bit deeper into those industry groups.
Yeah, if you look at the industry groups, it's also mostly red. We have 24 of them, just 8 are in the green right now. Autos, by far and away, the winner there. A lot of that is Tesla, and that's leading that industry group up more than 5%. So that's the good news. Much more subdued gains from there. You have chips doing well, and at the bottom, telecom not doing too hot, down almost 2% or so.
All right, going to interrupt you here, Katie. United Airlines crossing the wire right now. Here are the 4Q numbers. EPS, we'll start with that on an adjusted basis. $2.46 a share. The street on average was looking for $2.12, so that would be a beat. Operating revenue coming in at $12.4 billion. The street on average was looking for $12.23 billion, so that also is a beat. A couple other quick numbers here. Revenue passenger miles coming in slightly higher than expected. And then I thought this was an interesting number. Available seat miles, 64.29. That's just pretty much on the nose of what the street was looking for. So all in all, the numbers look okay. And here's your forecast coming across the wire right now. 1Q adjusted EPS being forecast a range of 50 cents to $1. The street was looking for 22 cents. So the lower end of that range is almost twice what the street was looking for on average, Carol.
Yeah, that's pretty impressive, and you're seeing it in the trade after hours, up almost 3% on United Airlines. Another stock that's gaining in the after hours, Interactive Brokers. It is now up about 1.25% here in the aftermarket. In the after hours.
All right, I want to get back to United Airlines, that company reporting earnings just moments ago. I've been digging into the press release. Shares of United after hours up more than 4%. The company spending a paragraph talking about how it was able to recover quickly from irregular operations in December as a result of that winter storm Elliott. The company said that 36% of all United flights were exposed to severe weather. Despite the impact, 90% of those customers made it to their destination within 4 hours of their scheduled arrival time. The company specifically calling out investments in its people, resources, tech, and infrastructure over the past few years with its ability to recover from significant weather events.
Take that, Southwest.
I mean, that's exactly what I'm seeing right there, right?
Well, $8.5 billion in adjusted CapEx for the year. That's the forecast they're giving. Two other interesting data points that really jumped out at me, though, out of that release. One is on capacity. They're actually saying the capacity in the first quarter is actually going to be up by about 20% versus 2022. And remember, this has been the big bugaboo. I mean, they've actually made a lot of money by keeping capacity constrained, but of course, we know the customer experience might have suffered a little bit here for some of these airlines. Anyone trying to book a flight knows it can be hard to even get a flight, and then if you do get one, of course, you could pay through the nose, and God forbid, if one of your flights get canceled, you're going to have to find other plans here. The idea that they're expanding capacity, I think that might be a good sign, not only for the business, but also for the consumer as well.
And again, you can see shares moving 4.5% higher after hours. You look at how United Airlines is doing over the past year. Shares are up over 12%. Just for some context, you look at what's going on at Delta over the past year. Those shares down 3%. To bring it back to Southwest, those shares down almost 19%. So United Airlines really dominant, at least when it comes to the markets.
All right, so you mentioned Delta. I'm taking a look at Delta in the aftermarket, and it's up about 1.5%, despite maybe some concerns that we had last week. I look at American Airlines, it's up about 2.4%. So what we got from United to just lifting the overall sector in the aftermarket?
Look, I wonder, as we continue to hear from these companies, we got Netflix later this week, we got regional banks tomorrow. I asked the question, Romaine, about what it tells us about the strength of the American consumer, and the question about whether or not we are going to be in a recession. If it's going to be a shallow recession, if it's going to be a deep recession. And when I see results like this about capacity going up for an airline, I think to myself, well, the demand to spend that money, it's still there.
Yeah, and we know that. And again, yeah, I mean, we talk about the demand. We know the demand was there. It was really just about the balance of how you run your business. And I think
But it's
the
still
idea
there.
Well, but the idea, I mean, you talk to some of these strategists, they say, okay, well, was this all just the revenge travel and that's going to subside? But I mean, it seems like most of the people we talk to on Bloomberg Television, they're saying, look, this is sustainable. And then if you do get a meaningful uptick in business travel, that just becomes the icing on the cake. I do want to point out real quick here, because we talk about earnings season and the read that we're going to get on the economy here. I mean, you mentioned the regional banks get tomorrow, but we get a lot of those industrial companies, like the trucking companies like J.B. Hunt. I think we get Prologis, a big warehouse company as well. Alcoa, of course, is a big aluminum maker. So I think we're going to get a much better sense here of how certain pockets of the economy are holding up. And if the results are similar to what we got out of United, this could be the all clear for a certain type of investor.
And this is the skew, really, because what you just mentioned, the J.B. Hunts of the world, the Alcoas of the world, that's probably a much better read of the economy. But then you think about big tech reporting next week and the sway that has over the stock market. If you think about the benchmark math, maybe that's more consequential.
Do we care about Netflix the way we used to? Is that going to be the bellwether?
I don't know if Netflix is the bellwether necessarily, but it is, the unofficial start of tech earnings.
I do care about the new ad-supported tier to the extent that, how ad spending has been, because we saw the reporting earlier this year that, they weren't actually able to satisfy the number of views that they said that they would be able to. And we've had so much weakness in the advertising market over the last few months, and it's at social media companies. So that's interesting to me. But I agree, it's not necessarily the bellwether.
I mean, the advertising market is brutal, and Netflix is going to learn that the hard way. But, look, we know they have the content, and, they obviously have a good base, so maybe they'll make it work.
Well, and I do wonder how much of the market is going to be kind of cut into different sectors, right? Something like United Airlines, I feel like that's old economy to some extent versus a Netflix or some of the tech names that just couldn't do anything wrong during the pandemic. It seems like Netflix has had quite a bounce. How much of the